Welcome to Investors Insights. Our topic today is Happy Anniversary, Mr. Market. There's a reason we chose that topic today. It's a day that we remember vividly, and I am joined by my colleagues Adam Van Zant and Trey Booth. We've had a great portfolio strategies meeting, and Adam, you brought up the reason why we need to be aware of this date and why it's an anniversary. Can you elaborate on that?
Thanks, Greg. Yeah, so tomorrow marks the 1-year anniversary of the market lows during the COVID environment. So really, we've come a very far away from there. We're starting to see some technical trends come back to meet some historical data. So let me dive in a little bit on that. So the S&P's Friday's close came in at 3,913. That pushes our new resistance level to 3,960. With a new support level of 3,860. It's also important to say that the 50-day moving average is hovering at 3,862. So it's going to be really important this week to watch on a short-term basis that support level. It almost meets up identically with that 50-day moving average. So that's one thing we want to keep an eye on. But it is encouraging to start to see some of these sectors start to align back with the markets.
Very much so, and to our viewers, we are excited to see the markets start to get back to acting normal, where we can look at fundamentals in terms of earnings as well as technicals and the market movement. It's hard to believe it was a year ago that we hit a low in the market. Look at all the changes that have occurred since then in terms of the vaccine and in terms of economic and strength that we're seeing in the different sectors of the market. We've seen the stimulus come out now that's been approved going back into the economy. We've seen the Fed at this point still keeping interest rates low. And so with that, Trey, you brought up a great point in our meeting about comparisons, that when you look at earnings compared to 2020, 2021, I think our viewers need to know about that.
Yeah, happy to. So with the fourth quarter earnings pretty much in the books at this point, analysts are starting to look forward to what the first quarter earnings will be. And the way it's important to remember that when you look at earnings reports from companies, and when we compile those to look at earnings comparisons for the overall market, when companies report quarterly earnings, they are comparing it to the previous year's quarter at the same time of year. And so this year, the first quarter earnings estimates will be compared against the first quarter of 2020. And while the lockdowns of 2020 really didn't hit their stride until April, the end of March, it really was, as Adam pointed out, the low in the market. We had already really started shutting down our economy. And so the first quarter of 2020, while it included normal months of January and February, March was a real rocky quarter, and so we're seeing very optimistic comparable earnings this year. On the S&P 500, expectations are for a 20% increase this year's first quarter over last year's first quarter in earnings. We're expecting about an 8.6% increase in revenue. Some sectors are even expecting a 70+% earnings growth over last year. These are huge numbers. And remember, when we talk about the market, you hear a lot of pundits out there saying the market is expensive. Fundamentally, the market's overvalued. A lot of them are looking at what's called the price to earnings ratio. What Adam was reporting earlier in the vlog was the price of the S&P 500. And so when individuals are quoting that the market is expensive, they're taking that price and dividing it over the total earnings, that E. And so when we're talking about earnings potentially in some sectors being up 70, 80%, and for the overall stock market being up 20% year over year, that earnings part of the price to earnings ratio, if it skyrockets, it makes the market, which looks currently expensive, a lot less expensive on a realized basis. And so these expectations year over year, when we look back over the trailing 12 months, it's a rocky 12 months we're comparing to. When you're looking at earnings, when you're looking at the total earnings for the last 12 months for the S&P 500, that includes some really, really bad months. And we're starting to sunset the first of our great lockdown months of March, and that'll make the year-over-year comparison very strong, which should be positive. Now, the downside is that that creates a high hurdle rate because expectations are very high. But I do believe that a lot of analysts are expecting us to exceed even those high expectations, which will be positive. Like Greg said, it's good to start looking at fundamentals as we can sunset what was hopefully a put in the rearview mirror permanently a very rocky and dark time for the markets, especially, and not just the markets, but also the economy and a lot of individuals out there.
And to our viewers, I want to say what Trey just walked you through is the reason we do these vlogs. With Adam pointing out the technicals, with Trey talking about the earnings. Also, you're going to be hearing in the news, hey, the market is way overvalued, or there's going to be volatility. There's always things going on in the market, but Trey's and Adam have just given you some great insight as to why we believe we're starting to get back to normal, if I can use that word instead of the new normal, and also from the standpoint why we believe there's still growth ahead of us in this economy as we move forward. We're going to keep you updated. This kind of information hopefully benefits you and you understand how it impacts your portfolio, and also how we manage our clients' portfolios to their financial blueprints and how important that is to us here at Five Plan Partners. We also are going to continue updating our social media, Facebook, Twitter, LinkedIn. We want you to be informed as things continue to develop as we end the first quarter of 2021 and head into the second quarter here, as well as tax season. We want you to be informed. We want you to understand why we're making moves in our portfolios and navigating through the market. As we get all this noise around us, we want you to know the facts and what we're analyzing each and every day. Have a great week. We will keep you updated. Thanks.